Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, the Crypto Hipster, Jamil Hassan, where I bring you founders, co-founders, entrepreneurs, executives, artists, musicians, you name it, in the world of crypto and blockchain all around the world. And I have another amazing guest today and another amazing episode. I'm really looking forward to it. And so my guest today is the co-founder of Yzer. His name is Thomas Bardawil. Thomas, welcome.
Hey, Jamil. Great to be here. Thanks for inviting me.
You're very welcome. Thank you for coming on. And I'm really excited about this show because we're going to talk all about Bitcoin today.
Yes, sir.
So, awesome. And I want to find out first, without further ado, what is your background and is it a logical background for what you're doing now?
Yeah, of course. So my background is in traditional finance. So I studied economics, graduated, went to private equity, and then from there moved to venture capital. So it is in the traditional finance system. And, I lived the years of monetary expansion where money was basically free and flooding the market. And with that, I got exposed, to some of the flaws of the economic models, right, of the Keynesian model. That is mainly debt driven. So from there, I got interested in the topic of initially of crypto. I'm not going to lie here, but eventually, diving deeper into this whole aspect, I got more and more interested in Bitcoin specifically because of some of the unique characteristics that it has that, in my opinion, make it different or sets it apart from the broader crypto market. And so I started going down the rabbit hole, and roughly a year ago, met the other co-founders. So Yzer were 5 co-founders, and we just met and clicked and identified the need for education, especially in the Bitcoin and finance industry. So the broader, the idea was not just to teach about Bitcoin, but teach about money in general and like how the economy works, how does money work, like the whole idea of how can someone become financially empowered or independent, right? And this links economics to finance to Bitcoin ultimately. So that was the idea. We saw a gap in the market because of the way the traditional system is thought, which does not resonate with the new generation. And we are here to fill the gap to orange pill people. So we see Yzer as an orange pill app. Right, it's kind of the app you share with people. You want orange pill when you don't have time. You're like, where do I start? And the idea is like, that's Yzer. That's where you start. And we get people onboarded really quickly with some sats, so they can start straight away getting a sense and playing with the technology. So that's what we do. And I would say there is a logical evolution to that, in the sense that I was in traditional financial system, and I saw some of the flaws, and I saw the opportunity that Bitcoin can bring at a global scale, right? So we're not talking local, we're not talking small effect, we're talking big impact globally. So I got interested in that, and I think it makes sense.
Great. So I've played a little bit with your app so far. I've gone through 2 modules. I've earned some sats, which is great, and I've learned. And there's certain things that I didn't know. Like I didn't know the Austrian economy. I knew the Keynesian. But what is Yzer all about? I'll let you hear it from your terms. And why Bitcoin, not crypto?
Awesome. So Yzer is an orange pilling app for through education. So we orange pill people through education. We give them a way to learn about the different topics that are related to their to money and their financial lives. What we're doing here with Yzer is that we're saying there's a gap between the educational system and the way people want to learn. We've identified those gaps, let's say, and we are tackling each of those individually. So the first one is the lack of structure. So especially online education, people want to know what is crypto or what is Bitcoin. They go online and they get overwhelmed. Too much information, talking about random topics. So like they'll be talking about mining and then separately talking about, hashing and people can't really know what goes chronologically in place. So the first one is stacking the structure. So we put a structure in place so people understand where to start, what to do next. Secondly is the way people want to learn. They don't want to read. No one, like especially the target that we're after, they don't want to spend hours reading. They don't want to focus for an hour. They want bite-sized classes. They want small snippets, quickly understanding. Like they want the TLDR. Right? I don't tell, like, I just want to know what's going on generally. And this is what we're doing. We're turning the classes into bite size. So we take an entire curriculum, break it down into small bits. And then from there, we find what is the essence of that concept. And what we're teaching is really the essence of a concept. And by doing those bites, we call it layered learning, right? So we're layering pieces of knowledge together and in a way that is easy for the user to do. So most of our user, they actually complete the app or work on the app during things like they're waiting in line. They have like 4 minutes. They're like in transport. They're in the bus. They're on the train. So it's really like 5 minutes pieces of insights that they gather that adds over time. So that was the second element. The third element is the gamification. So of course, people need to be somehow rewarded mentally or with dopamine hits. And this is what we're doing, including gamification, XP, level ups, a bunch of stuff like that, treasure chests. And also we are implementing a learn to earn mechanism with sats, where we basically reward a user with sats. So, putting all those things together into a single app is what we hope to achieve is helping people get orange pilled and spreading the message of Bitcoin. So that's for the first part of your question. For the second part about the why Bitcoin versus crypto, I think this is probably one of the most important topic today in this entire space. And I think the issue is that there's animosity between both sides. There's one side that is like Bitcoin, maxi Bitcoin. There's a side that's like crypto and crypto. And if people say, well, Bitcoin's not crypto, you kind of like get pushed towards the maximalist side and say, yeah, we're all the same. But sure, there is something that links them together, is cryptography, right? They are both using cryptographic methods, but their objective is completely different, right? So if you look at Bitcoin, the objective of Bitcoin is to become a global financial system, right? And to achieve that, it has specific characteristics that are unique to Bitcoin and can't be replicated. Whereas crypto, they're more like tech companies that they're created by a founder, a founding team, and they have different use case. Their main value prop is mostly to remove intermediaries and middlemen. They have roadmap, they have product deliverable, and feature updates. No one expects like a Mana or an Axie to become a global financial system. So I think here the idea is to understand that they're a different asset class. The cryptography technology is a technology akin to the internet. And because Bitcoin and crypto both use cryptography, many people think they're the same. And it's like saying that anything that uses the internet is the same. So this is where, I feel like there is a difference. And this is why our objective as Yzer is not because the way I see it is crypto is VCs, right? It's the new VC, right? So you create a company, it has a cool use case, it's value for the user. There's a team that had the idea. There's a team that develops the idea, that has features that are coming out, and it's cool, right? There's no problem with venture. I was in venture, so there's absolutely no problem with venture. But then saying that it's the same as an underlying global financial infrastructure is just not correct. And there are reasons why they can coexist. There's no issue with that, but there's a reason why they're different, is because they try to achieve different results. And for us, what's important at Yzer is the financial empowerment, and it's the financial layer that we feel is what we want to tackle. Because it's a lot of people, I would say, in Europe and US do not see some of the issues around the world that are linked to the financial system. I'm from Lebanon, I'm Lebanese. So I can tell you that it impacted every single Lebanese person in the world from one day to the next, when the banks closed down, shut down accounts for everyone, and you could not take out your money out of the banks. If people had their entire life savings, they were about to retire, and then suddenly your money is gone. And it's very real. Like, it's not like a joke. Your money is gone. You don't know what you're going to do, right? It's your entire retirement. And this idea is not just in Lebanon. I mean, this happens in other countries, in authoritarian regimes, and it also happens through inflation and currency manipulation. So what we want to do here is we want to provide education to support the growth of this global financial system, which is equal to every participant, which cannot be corrupted, which cannot be manipulated, and which has predictable rules that can never be changed. So this is the way we see it.
I love the way you see it. I do get into, I find myself sometimes, and I've just been muting them, is people collapse the two, comparing, crypto from 2013 versus Bitcoin today. They're not really comparable, and the people who do that a lot, who are against Bitcoin are a lot of economists, and you have
sorry, excuse me, Jamel. Can I just add one aspect that I think is important to add here? Actually, I just want to rebound on the last point you made. When you say people talk about Bitcoin crypto today or 2013, like the Bitcoin, I think the people that do that, there are people that do that, but those are traders, speculators. Right, so those are people that do not care about fundamentally what the company does. And you can have traders in the traditional stock market and traders in the crypto market. But when those people talk, they're talking more about, their technical analysis and seeing the world from a different lens. So this is also something that we need to distinguish. There are investors, there are traders, there's different class of people that all, have different objectives and incentives. Sorry, I interrupted you. You want to talk about economists?
Oh, no. Well, yeah, I do too. But thank you for clarifying that, because I didn't think of that perspective that, yes, they are traders. And yes, they're using technical analysis. And I have a master's degree in finance, and I believe in efficient markets. And I believe that the past doesn't tell you what the market is like today. So because the market has no memory. So I automatically, naturally disagree with technical analysis, but yeah, let's talk about economics, because that's right. The biggest opposition to Bitcoin has over the past decade has been economists. Nouriel Roubini is one of them, but there are many others, and they're frequently wrong, right? So why are they wrong? And why are they so adamantly against Bitcoin?
Mm-hmm. Of course. I mean, I think this is an interesting perspective because it doesn't only apply to economists. It applies to a lot of different industries, I would say, and jobs. It's the idea that some people, it's all a question of incentives at the end of the day, right? The world works on incentives. And the question is, if you work from first principle, what are the incentives of the people? So when you talk about economists, a lot of them have built their reputation and their career based on a specific model, their specific, way they see the economy, mostly based on Keynesian economics. And from there, they either have jobs at university, they have published books, they have advisory roles. And when you come in with such a dramatic idea as Bitcoin and bringing back the idea of Austrian economics, hard money, less government interventions, and all those ideas, it's not just an update of the current system, it's a complete change of the current system. So that would mean that everything, all they worked on becomes obsolete from one day to the next. They won't be selling books, they won't be getting those advisory roles, they won't be lecturing at universities, they won't be paid. So based on that, they cannot, or it's harder for them to accept that we're moving on.
Got it. And so like not a lot of people here, at least me, we weren't taught Austrian economics in college. We were taught Keynesian, right? We're all taught like this is the basis. Like what is special about Austrian economics that makes it perhaps a better model and the better one for Bitcoin?
Mm-hmm. When I was in university, I'm going to be honest, we probably just literally did one lesson on Austrian. I don't recall having dive deep into Austrian economics, it was really Keynesian all along for us. So for me, it was quite a new perspective when I started getting interested in that. But the difference between Keynesian and Austrian is mainly in the way the economy should be regulated in a way, let's say. So what Keynesian says is that government should intervene. There should be government intervention, whereas Austrian sets more for a free market and saying that the market is going to adjust by itself, demand and supply, and that's a free market. We can go deep into that, but in Keynesian, basically, both identify business cycles, booms and busts. And what Keynesian say is that through government intervention, you can lessen the bust, so have a softer landing, have lower a bust, and improve the growth. So they intervene to move the market. But what the Austrian says is that whenever the government intervenes, what they're doing is that they're breaking the equilibrium. And when they break the equilibrium, what happens is that they're in constant state of deficit. Because for you to break the equilibrium, what you have to do is either add demand or supply where it's not needed, right? So that's the only way you can break the equilibrium. So by doing that, it's going to cost you. There's going to be an intrinsic cost of moving that equilibrium. And by this intrinsic cost, so as long as you're not in equilibrium, it's going to cost you. So now what Keynesian are saying is that, yeah, well, the cost, the benefit outweighs the cost. But it's becoming clear that firstly, it's not. And so that's one of the main aspects, government intervention. And I think that, how does that link to Bitcoin? It's through the idea of hard money. So Keynesian advocate mostly for debt, right? In the Keynesian model, debt is good because of several multiplier effects. So, if you spend, it all links to fractional reserves, right? And the way the monetary system is controlled, that allows multiplier effect. So when the government, the main idea is that if government spends 1, it's going to benefit 10 in the economy because it's going to be spent multiple times. So it's spent by the grocer, but then he gives it to the butcher who spends it with someone else and so forth. So that's the idea, whereas in Austrian, it's more about hard money. It's about lower debt system because money is more valuable. It's not, it cannot be printed, it cannot be counterfeited, I would call it this way. And based on that, what it does is, and here's the fundamental issue, or let's say the difference between those two aspects. On the Keynesian model, because of the idea of free money, what it does is that it pushes consumption, pushes investment. Money is free, we're printing money, consume, right? It basically increases the time preference. Whereas in Austrian, what it says is that money is scarce, right? Money is something valuable. So it's going to keep increasing in time. So if your money is going to keep increasing, you're going to be smarter about how you spend it. You're not going to want to spend it recklessly because it's appreciating. Whereas in the Keynesian, it's depreciating in value. So you're becoming more conservative with the way you spend. And this is, on the Keynesian side, what they say is that this hurts the economy because if people don't spend, how does the economy grow? So they want, and here again, it's which side are you for? Because what we're seeing today is that on the Keynesian model, what's happening is that, sure, there's that high debt, but ultimately what that does, high spending, high debt, it means that the lower classes are becoming more in debt and spending, and that money ultimately goes to the elite or the top 1% or 0.001% to be more accurate, who are the only ones actually benefiting from that. There's a lot of money, but everyone's in debt and only a couple of people benefit. It's all accruing to small number of individual. But I don't want to talk, I don't want to go too far into that, but it ends in trying to understand where the money goes and where the incentives to push different systems, But yeah, so the idea of how it links to Bitcoin is the idea of scarcity in the monetary base. So the scarcity of the monetary base pushes for people to want to save and have better consumption behavior, which I believe is the way forward.
Sounds good to me. It sounds right to me. It's better to save, and build for the future. I agree. So economists are not the only ones though who have been against Bitcoin. Bitcoin actually, I went to this website called 99 Bitcoins, and it showed that Bitcoin has been pronounced dead over 470 times. And the latest one was in April by Chamath, who was a big Solana guy, saying Bitcoin is dead in America. Why are these public statements, Bitcoin's premature death, always misstatements?
Good question. First, I just want to say that Chamath, I love his podcast. He does a great podcast called All In Pod, and it's quite an interesting one. And also, one thing that I want to point out is that some people tend to say, find a fundamental item and say, if I agree with this person, I'm going to agree with everything else they say. And if I don't agree with that person on this fundamental topic, I'll disagree with everything they say. I tend to take a different approach. I take every issue separately. So there are a lot of issues on which I think Chamath has great insights. But I think his Bitcoin perspective is extremely wrong. And I don't think he understands what Bitcoin's trying to achieve. I think he's too deep into the VC world and doesn't see the real, let's say the rest of the world the way we see it. So this is first thing I want to say. And now talk about why many people are saying the Bitcoin is dead. Actually, it's funny because I did a tweet a couple weeks ago, which was history repeats itself. Bitcoin's dead, Bitcoin's at all-time high, Bitcoin's dead, Bitcoin's at all-time high, right? It's just the way it is. You know, people are always going to say it's dead and it's always going to come back. But I think the reason is that people see challenges. So when you tackle something as big as replacing the global financial system, right? You're not doing something easy. You're probably doing the hardest thing that can ever be achieved by humanity, right? Is basically the people switching, turning around the system of how the money works, right? From a system of an elite that controls it to a system where everyone is equal. So that's the biggest thing you can do because you're facing the hardest competition, the people with the money, the people that don't want the system to change, right? So based on that, you're going to have extremely tough challenges when that's your objective, right? You're going to be facing huge challenges. And when people don't understand Bitcoin, so those people that criticize Bitcoin, in my opinion, don't really understand it. They read about it from here to there, mostly read headlines because some of those people don't bother really doing in-depth analysis. And they read headlines and they kind of get it. They say, yeah, it's decentralized, it's cool, but they don't really understand how it works. So for instance, if I were to ask them, like, what's the difference between a full node, mining node, and the user, and how does a change in protocol happens? They would have no idea, right? So based on limited information, they see a huge challenge. And they say, no chance, Bitcoin's dead. Like, there's absolutely no chance it's going to do this. But once you really understand how it's built, you understand that actually those challenges are going to happen and Bitcoin's going to overcome them one by one because it's just the way it's been designed, it's been built. You cannot change it. And you could, I would say, let's be honest, 10 years ago, you could have. Yeah, you could have corrupted the entire system. Now, there's no chance. So it's too late. The only way to corrupt it is corrupt it when it was young. When it was young, they overlooked it. They thought it was not going to be a threat. And they were wrong. And now the system is too strong to fail. As you see here, it's not too big to fail like with other things. It's too strong to fail. Not a question of size. It's a question of strength, resilience. And every challenge, Bitcoin's becoming more battle tested. It's becoming stronger. It's becoming more resilient. And it's every time it's a skeptic that turns into an optimistic.
We're going to get into that. We're going to get
which part?
I love too strong to fail concept because I come from AIG where we were too big to fail, right? But I want to close this front as far as the critics first before we get into that. Bitcoin's been attacked on many fronts, as you know. The 99 Bitcoins, I said, an economist, I said. It's also been attacked heavily on the environmental front, right? Especially on the environmental front. So what are the environmental benefits of Bitcoin from both a renewable and a non-renewable perspective? And how could Bitcoin lead to the transformation of the entire energy industry to benefit humanity?
Awesome. Great question. I think again here I want to point out to what I said earlier is that people that FUD energy in Bitcoin are people that haven't done their research properly, and we're seeing the narrative shift since BlackRock ETF spot ETF is in the works. You're starting to see some magazines debunking some of that. The latest one being Forbes. So there's a great Forbes article about that. I can share with you. Maybe you can put it in the footnote or something. But they're starting to understand what's going on, and they're starting to see that it is actually ESG, if you want to call it this way, compliant. But so I mean, there are many metrics to which to look at it. So the first one is from what sources is the mining rate coming from? Over 50% of it is from renewable energy. So from that aspect, only it beats any other investment asset class or any other way to get your energy. So the second aspect is more than just that. What can it do to improve the current renewable landscape? And Bitcoin does a lot to improve the landscape. So the way to look at it is to understand one fundamental thing is that renewable resources are usually in stranded location. Why? Because where there is strong renewable energy, people don't want to be there. You don't want to be somewhere there's a lot of wind. They want somewhere there's a lot of heat. Somewhere there's like huge, things happening in with like either solar, hydro plants and stuff. So those are extreme conditions where you get the most amount of energy. And currently, what the issue is that all this energy has to go to be redirected through the grid to places that consume the energy. Energy is really hard to store. So there is no good way to store energy at scale. Batteries are inefficient and lose energy. So currently, one of the most the biggest way that people store energy is through pumped hydro plants. So basically, when there's too much energy, they use that energy to push water up a hill. And when they need the energy, they let the water go back down the hill, moving a turbine and then recreating the energy. So that's the way they store energy, which also is not very efficient because you reach max capacity fairly quickly. So all that does is that it reduces the profit of renewable companies because of stranded energy. There are peak of demand in energy during the day, during the night, or the different times in the day. And during those peak of energy, the grid is oversaturated, and then they just can't service, and a lot of the energy that they could use is being lost, either because it's they're at capacity or the grid is at capacity, so which often happens. So what Bitcoin does is that a miner doesn't care where he is. He can be in the worst places. He doesn't care. So what it does is that it's an add-on to a renewable facility. A renewable facility will say, you know what, I'll add miners. By adding miners, what I do is that either when I get to capacity or when the grid is at capacity, I'll turn on the miners. I'll turn on the miners, mine Bitcoin. With the Bitcoin, I have more profit in the company. With the profit that I have, I can start reinvesting. So now I become a more profitable business, more successful. I can expand faster. So the first thing you're going to do is you're going to improve the grid system, because selling to the grid is always the most profitable. It's much more profitable than mining Bitcoin. So your first objective would be to invest in the grid so you can sell back to the grid, make it a more reliable grid. Secondly, you're going to invest in a bigger facility, just expand overall. So it does promote the expansion of renewable energy, is, I would say, the number one point. So already understanding this is huge, because you then understand that more than just being energy efficient, it's actually energy positive. The second aspect I would say about the mining industry, which also links to kind of the idea of self-sovereignty, is the idea of countries. So let's take El Salvador, right? So today you're El Salvador, you want to trade with India. You're going to have to go through 100 American systems, or controlled system, SWIFT, bank accounts, KYC, this and that, US dollar, and so forth. imagine if there was a system which you could participate in by using the resource from your own country. So what I mean by that, so they have volcanoes, they have different natural resources. Today, the only way to monetize on that is to buy ways to turn this into electricity, and to do that, they need to just sell it as electricity. Whereas if they could mine Bitcoin, they would basically just use their own national resources to generate yield, generate revenue, improve renewable infrastructure across the country, because by improving this, you're improving the infrastructure in the country, and allowing for monetization and participation in the financial system that is outside the control of any other country. And then you interact peer-to-peer with any other country. So this is also massive in terms of country, because they gain self-sovereignty. They can optimize their own resources, natural resources, to participate into a financial system.
I love it. There's a lot to think about. There's a lot to talk about.
There's so much to think about, and I don't know all the answers, right? So I'm just I'm a learner like anyone. So I'm trying to learn as much as I can, and I'm sure it goes much deeper, and I'm sure I haven't covered even half of it. But those are just things that I know about that make it a big positive for the overall renewable industry. And this is the narrative that's starting to come out, which is good.
I think it sounds good. I think it's good. It's good to see it. Instead of just saying it's bad for the environment and not having anything back up that statement, I think it's good that there's more work being done. So I want to go back to what we talked about. I was going to talk about shifting to it's too strong to fail. Bitcoin is too strong to fail. Let's start. We're going to talk about BlackRock, but I want to start with 2017. I entered Bitcoin in 2017. There was this thing going on that I didn't understand. It was the Bitcoin War of 2017. What was that all about?
Oh, that was a fun one. So basically what happened is that around 2015, discussions came about the topic of block size in Bitcoin. Initially, blocks were small, they were limited, blocks were the same size, but there were a smaller amount of transaction, meaning that blocks wouldn't get filled most of the time, and fees would be low. As the number of transactions started scaling, some miners started saying, well, let's increase the block size, because we could include more transaction, make more profits. And here there became two sides: the big blockers, the small blockers. The small blockers are, in my opinion, the one that truly embody the vision of Bitcoin, because the small blocker emphasize the decentralization aspect. Why do you need small blocks? You need small blocks because if you don't have small blocks, it would be too costly to run a node. And if it's too costly to run a node, only limited amount of large companies would run nodes. It would require servers, and it would be too complicated. And by reducing the number of nodes, you're reducing the security of the system. But maybe it's really hard to explain the issue of the block war without explaining how the Bitcoin system works, the difference between nodes, full nodes, mining nodes, and users. So let me think 1 second how to best fit this in. But I think the important sense that whenever there is a change that needs to be made on the Bitcoin network, there are three key stakeholders. There are the full nodes, there are the mining nodes, and then there are the people that hold the coin, right? So why does that come in play? Because the change, there's also the devs, the Bitcoin core with the devs, right? That are the people initiating any change or any updates. So it goes, from a consensus within the dev team to then, a possible BIP, and for the BIP to be approved, you need the miner to approve. But the miner, if they approve something by themselves, this is not enough, because they need the nodes to also approve, because the nodes are the ones running the software. And if the nodes don't approve and don't use the software, then the blocks that the miners will issue are going to be rejected. So there's the full nodes, and then there's also the users, because the users, in the case of a hard fork, are going to be the ones that decide where they want to stand. So they're going to receive 2 coins, and they're going to be deciding which coin to sell and which coin to hold. Very few will hold both coins. So understanding this dynamic getting back to the block size war, what happened is that the small blockers said that we need small blocks because the nodes are essential in the security system, because without the nodes, miner can push. Whereas the big blockers were mostly profit driven. They wanted more profit, they say that it's for scalability and speed, but this is not true, because even with much larger blocks, you will never reach the scalability and speed of a MasterCard or a Visa. So you're just going to blow the entire thing and still be inefficient. So this is really not the way to do it. And actually, if we want to go deeper into that, the size of the block is actually a feature, not a bug, if you want to say it this way, because scarcity of block space is what makes a block valuable or make Bitcoin valuable. It's like prime real estate, right? You want it to be scarce. You want block space to be scarce. A lot of those topics, by the way, is very well explained on the app. So I invite anyone to just use that, because I will not be able to cover all of it, but it's very well explained. But ultimately, in my opinion, the size of the block is a feature, not a bug, because it allows for scarcity of block space. So ultimately, this argument in big blockers and small blockers started at 8 mega blocks. So a Bitcoin block is 1 mega. They want to increase it to 8 mega. Long story short, most of the miners approved the change because financially for them, it would have been beneficial. So there was overwhelming support for the change on the miner side. But what happened is that nodes refused the change. So most of the nodes refused to update the software and refused to do the change. And after a long fight, the full nodes won. So this shows even further the strength of the system, right? And you're going to see in two ways how the true Bitcoin won. The first one was through the full nodes. This is how it initially won. So node said no. And it started stirring up a little controversy in the community. And a couple of big players said, I don't care what nodes say, I'm going to fork it, right? So the Bitcoin Cash, Bitcoin SV said, I'm just going to go ahead and fork it. I think I have support, I have the mining power, I think I'm going to make it. And they forked it. And what happened next is that the third security system kicked in, which is the Yzer. In the case of a fork, and I remember, at this point, I had no clue what was happening. And I just heard, yeah, they give you the same amount. So imagine you're just into the space and they tell you, well, whatever Bitcoin you're going to get the same amount of it on a different chain. So when you hard fork, you basically just take whatever the Bitcoin is today. So if I have a balance of 10, I have a balance of 10, and they create a second fork where I also have a balance of 10. So now I simultaneously hold two balances of 10 on two different chains, right? So at that stage, you're going to make a decision. You're going to say, I'm going to sell one because it's free money. So I'm going to say, I think this one's the true one, this one's the fake one. I'm going to sell from the fake because if I wait, the price is going to crash. Everyone knows the real one's the good one. Right now, there's liquidity. Let me grab that liquidity the quickest, as fast as possible. So that's what people did, right? People started grabbing liquidity from the fake chains and basically selling it for real Bitcoin, and price crashed. So that was the third security system of the Yzer. That they say, no, I don't care what you say, I'm going to sell your coins. It's that simple. And this is what makes Bitcoin as resilient as it is. And I heard you say talk about BlackRock, and I think I'm gonna link straight into this. But so ultimately, big blockers failed, small blockers succeeded. However, there was some sort of concession. The concession was SegWit. SegWit was activated post this debate through a soft fork. So here it was not a hard fork, it was a soft fork. And what they did, and I mean, the difference between hard and soft fork is basically everything that is protocol, let's say, changes is going to be hard fork. If it's just an update or a small change, it can be done through a soft fork. And so, yeah, so they soft fork with SegWit, and they segregated witness. So they took out the witness data from the block and separated it, ultimately increasing the block size a bit, but it's a good outcome, I would say. So yeah, from this conversation to link it to BlackRock, there's a lot of people talking about BlackRock and how they could fork Bitcoin. But here again, they're going to end up at the same. I mean, let's put aside the economic incentive they have not to hard fork it, which would be absurd for them to even think about something like that if they have any skin in the game. The way it would work is that you're BlackRock, you control the devs. Yeah, you paid all of half of the Bitcoin core. Anyway, people that can be paid have probably already tried to be bribed in the past. So I would say that anyone left in Bitcoin core is very genuine with the mission. I don't think they're easily to bribe because I'm sure a lot of them were offered a lot of money. So let's assume they achieve that. They corrupt some of those people. They create an update. They control, let's say, the mining, or somehow they start controlling the system. Their next moves are they want to hard fork the system or whatever. They want to do an update. So it's even if they want to change the hard cap, whatever update they want to do, right? Let's assume they want to change the hard cap. People are scared about that. What would happen? They will require a hard fork. So you would have a new, so you have 10 Bitcoin, you have 10 Bitcoin on the original and 10 Bitcoin on the BlackRock fork. You know that BlackRock is gonna try to put liquidity behind their coin. So you're gonna be selling that coin for a high price and convert it into Bitcoin. What Bitcoin user would say, oh, I'm just gonna go with the BlackRock fork. I feel it's more interesting. It's not going to work. People are going to stick to the original Bitcoin. And what's going to happen is that ultimately there's going to be no liquidity, no user on the BlackRock, and they can keep pumping liquidity into it or buying all the coins, but they're going to end up with a system that is not used. And this is the resilience of Bitcoin, is that regardless of what you do to Bitcoin, the original Bitcoin will always survive, because the only way to change it is through a hard fork. So even if you hard fork it, the original is still going to be here. You can't just change the original. But all you can do is create a copy of it and change the copy of it. But it's any change to protocol, or tough things are going to be done through hard fork, which will keep the original. So I don't see this as a threat at all.
Interesting. Okay, I'm glad you don't see it as a threat. I'm just looking at what the boomer generation in America has done, and they've kind of destroyed every industry they've touched. The media they corrupted, the insurance industry they killed, they came in the government, and the U.S. government's not like. I just my projection, I guess, is a little worse than others. Like, could they kill Bitcoin Core, and then go with their own chain? Is that possible?
How would they kill Bitcoin Core? They would offer enough money to all the devs to just flip. There will be new devs. Not all devs. They can't. Ultimately, even if there's no more Bitcoin Core devs, I'm sure big companies like Blockstream would be happy to maintain, because you don't even need much changes. You just need maintenance. I think a lot of people love the fact that there are no changes to the Bitcoin system. So, everything is a risk, but I think Bitcoin is battle tested. I think it will. Game theory suggests that they shouldn't be doing this. They have no incentive to change it. They have incentive to play the game. They have incentive to be the biggest, largest player, for sure. They'll collect fees. They'll collect different sort of fees, but I don't see the incentive they have in trying to break it.
Sounds good. Awesome. So let's talk about, shift gears then a little bit, because a lot of the founders I talk to, a lot of entrepreneurs I talk to, describe this concept of multi-chain, world, right? But then you also have, you have the multi-chain world between Ethereum and Solana and all that. But you also have a lot of Bitcoin chains. You have Litecoin, you have Bitcoin Cash, you have Bitcoin SV, you have Bitcoin Gold, Diamond, all this stuff that would be forks. So what would a Bitcoin multi-chain world look like? And what do you think would be possible with that?
I don't see a Bitcoin multi-chain. Definitely not. I think there's Bitcoin on the realm of a global financial system. There's Bitcoin, no one else. So that's pretty straightforward to me. The same way, TCP/IP. There's no, it's the standard. This is just going to be the standard. You can't compete with it, because there's no way to create. The immaculate conception of Bitcoin, I would say, is is unique, and the fact that it came before any hype, meaning that for many years there was no speculation, there was organic grassroots movement. Just the timing and all those things make that you can't replicate Bitcoin, unfortunately. It's not possible. What could be is that there are going to be other chains. Yeah, same way, there are other websites on the internet, or other ways the internet is being used. So there are going to be other chains. But the way I see other chains, they're going to be solving specific use cases. And the main use case that chains solve is cutting off the middleman, right? Cutting off intermediaries. And this is, decentralized exchange. This is what it does. It cuts out the middleman, or any sort of like those services. So there's I do see a world where there could be things that cut off the middleman, but I don't think that they're going to be the same scale. I don't think they're going to have the same impact. It's like comparing gold to a single company, right? So you look at the market cap of gold, $11 trillion, then you're comparing that to individual companies. So I don't think they can be in the same realm. And regardless of that, I think that that's my opinion. Of course, I think that any current crypto project could be built on a layer 2 of Bitcoin more efficiently. I agree. I concede that a lot of the updates have been coming recently, and that was not possible. My statement would have been wrong probably a year ago, 2 years ago. But today, I think we're there. There's rootstock. Rootstock allows for EVM compatibility on Bitcoin, meaning that they can use the same language. So I would say today, with Liquid, rootstock, RGB, Lightning, of course, all the possibilities are out, and there's no need for another ecosystem. They're going to be for sure, but everything can be built there more efficiently, in my opinion.
So then let's not talk about the multi-chain world. Let's talk about global global problem areas, right? And I didn't get to this module yet on your app, and I was kind of hoping to, but I will. And it talks about Bitcoin's role in transforming global problems such as politics, wars, and human rights acts. What do you see as that Bitcoin's role in that, and what can it and will it be?
Well, it's very simple: corruption. I mean, I don't think anyone in the world will say that they don't agree that corruption of governments and corruption of nations is not a problem. I think it's a problem. In my opinion, they even made corruption legal in the US. They called it lobbying. I mean, what is lobbying other than corruption? Paying for lobbying is like you're paying to push a message. It's called so I would say corruption is, in my opinion, the biggest thing. Transparency, visibility, and putting the control back where it should be. Like, I'm not saying that it should be with the people, but I say it should be neutral. It should be open. It should be a system that everyone knows the rules. Everyone can see the rules. Everyone can track, look at it, analyze, understand the rules, and those rules are the same for everyone. And I think this is what the problem we're facing today. I mean, U.S. Congress people are much more perform much better than the best investors in the world. And I mean, this data is public. You can see their returns, and they're the best traders, although they're Congress people. So unless there's a special skill they teach at Congress school that gets them to be excellent traders, this doesn't make sense. So if you have now a system where everything can be tracked or traced, transparent, then it's much harder to do those things. And I say that about the US, but it's not limited to the US. It's a global problem. So I think that the transparency is key, is understanding how money flows across the world and making sure that it flows in the right places. And you don't just pick from left and right, because this is how it is, especially in Africa, especially in underdeveloped country. In US, at least, they know that they have to give, they take 10%. Where in other countries, they'll take 75%, if not 95%. They'll just leave nothing to the people. So it's a huge problem. And as soon as you can track, and it goes, from government officials, politicians, but it also goes to charities. Like if I'm going to invest in a charity, how do I know it's going to the right place, right? A lot of people invest in charities, and along the way to a village in Africa, you have 10% left. Why? How come? Because there's a process that you have to go through. If you could make the process more transparent, everything would be better. So in my opinion, this is the biggest one.
I agree with you. I wrote a book, Old Paradigms Die Hard, and it talked about, the how Ukraine built a sovereign digital economy in the face of war with Russia. So, and they accepted Bitcoin donations when the war first started. So that makes perfect sense to me. So I want to thank you very much for your time today. This has been an amazing conversation, and time flew by. And
amazing, Jamel. Thank you so much for having me. It was a great conversation.
I have one last question.
Of course.
Before, it's probably the easiest one. It's how can people find out more information about you, about Yzer? How can they start earning sats? How can they learn their content? How can they do any of that?
Of course. Just go to the website, yzer.io, Yzer, YZER, and you'll find a link to our social. You'll find a link to the app. You'll find everything you need. We're very, our objective with the community is to be very social. So we have also a Telegram. You can always interact with the team. You can send us DM on Twitter. Like, we're very easy to reach. You can email us. We'll respond. So just use the app, have fun with it, start collecting sats. And if you have any questions along the way, let us know.
Awesome. Thank you very much for your time today.
Jamil, it was a pleasure. Thank you.